So, do you want me to go? Where would you like me to start again?
If you want to just continue where you're up to, that's fine.
Okay. Yeah. Cool. All right. So, I'll just start with the Sophia story. So she's always had a desire to help people, and as a teenager, she used to work at a local not-for-profit as a volunteer, helping people with disabilities. And after completing school, she started work through TAFE whilst working in the care industry, and this led her to full-time work with people of more complex needs, in particular in the NDIS sector. And Sophia was good at what she does. She's empathetic, building strong connections with all who she supports, and she enjoys what she does, but she feels that she can provide a better level of service herself to those who she's serving. So she decides, after doing some research and talking to some other small providers, to set up her own business. And she provides home support and group activities to the community. At first, everything seems to be going well. She sets up the basic foundations of her business around her finances, her client care and administration, and she hires several people from her network whom she's known for some years and trusts. Now, her focus has always been on the client and less on the administration side of things because that's where her strengths lie. So things like claiming payments and meeting government obligations have been looked after by a part-time bookkeeper and administrator that she has. But both of these have had no prior experience with the NDIS. Now, Sophia's caring nature has led her to trust people and take what they say at face value. But when the time comes to pay her staff superannuation payments, she logs into the bank account and she realises that there isn't enough cash to actually do so. At this point, Sophia suddenly realises she has failed to keep her finger on the pulse of her business. And her heart sinks as her dream of supporting others in being their best self is shattered. So what's the lesson? Well, desire and a passion to help others may not always result in success or avert a crisis. If we don't spend enough time on our finances and putting enough resources to it, then we're going to have some problems and eventually you're going to fail. So how do we change the story? Well, we need to make systems and our finances a priority. So strong finances are the foundation of your business. But you may be thinking, where do I even start? And why does this even matter? Well, hopefully what we've just been talking about will answer the second question. So now let's look at the importance of cash. Now remember, profit is not cash. Profit is what's left over from your revenue after your expenses. And your cash may not necessarily be received when you think it's going to be received. So you need to think about having cash there, having reserves and things like that, so that you can get through any situations that arise and any slow payments. Remember, cash is key. You need to have cash available to meet your obligations when they fall due. Remember, cash is the lifeblood of your business, and it's going to flow in and out, and it's going to flow, and it's going to be going up and down as you run your business. And managing it well will ensure that you always have funds to cover your staff, your government obligations, expenses, and then for growth opportunities. So now let's have a look at some tools that can help you within that cash flow management. So the first one is cash flow forecast. And I see this as a crystal ball for your financial health. It now enables you to be able to look into the future, to be able to some degree, predict what's going to happen. It helps you to plan for when money will be tight, and as well to see the opportunities to build reserves. And it'll also help avoid panic each quarter, particularly when superannuation payments are due and other government obligations occur. So now let's have a look at a cash flow forecast example. So in this example, we have our sales, our expenses, and whether or not we're making a cash surplus or deficit for the month. And generally, we would set one of these up for each of the months, showing what we expect for our sales and our expenses. And generally, we'd start out having a budget that we kind of work this across and then adjust it for the time difference for when we expect payment to be received, cash coming into the business, and when it's going out of the business as well. But from this particular example, you can see that we have a cash deficit in that first month. So if you were a business that was in early stages and you didn't have any cash in the bank, then you're suddenly going to have to find yourself another $40,000. And as you can see, it kind of goes up and down throughout the months. And you'll also see that there's also another deficit again around the October period. With our sales, we can split that down into the different areas of our business and track those and the cash coming into the business at the time. Our cost of goods sold is anything that relates to the direct service delivery side of things. So wages for support workers and travel and all those kind of things would sit up there. And then we have our other costs, which are our overhead costs, things like accounting fees, marketing, rent, other expenses like insurance and wages and superannuation, and that to support the running of the business. I have put together a template that you can download, which will give you a cash flow forecast that you can utilize. It also has a profit and loss sheet in there, so you can use that as a budgeting tool as well, and that will flow through into your cash flow forecast. But remember, the timing of your cash coming through, you need to adjust that in your cash flow forecast so that you get a good prediction of where things are going to happen. So now imagine never having to worry about having the money to pay your taxes, your wages, or your expenses. So what I see is the solution to that is having bank account separation. So that's having a number of different bank accounts for each of the different types of obligations you have in your business. So you'd start out by having an account, your operating account, where things like your cash is coming into your business from your sales side of things, maybe things like subscriptions and other things that are coming through there as well. And then you'd have a number of other accounts like for your taxes relating to your income tax, BAS, one for your superannuation. You can even separate your wages out for yourself and your staff to another account. One other thing is thinking about having an account for your profit. And you can use that for reinvestment. Now, the way to think of that is best to start with, if you've got a budget, whatever the amount you are thinking you're going to make a profit, put that away in a separate account, and then that's there as a general reserve. And you can utilize that for things as they crop up for reinvestment into your business. And also too, it may be you take a percentage of what you would like it to be. So, in this industry, profits are anywhere from 2%, maybe up to 6%, something like that. Some people are able to achieve more, but really comes down to the last thing at the bottom, which is your operating expenses, those things that are helping you run your business as well. So, and remember that these are what's left over after you have worked out what the cash is going to be for each of the other ones. So if you use this as a simple system, it'll bring clarity and peace of mind. But do remember that, you're going to start at a certain point, so it may take a little bit of time and some adjustment before you find something that is optimal for your business. So what happens if you don't take action? Well, imagine being in Sophia's situation. You're overwhelmed, you're scrambling for cash, and you're wondering if your business can survive. So do you really want to be in that position? Now imagine the opposite. And you can be like Dorothy here, you can click your heels together and know exactly where your money's going, having the confidence to grow your services, and sleep soundly knowing your finances are secure. But the choice is yours. So something to ponder. The best time to take control of your finances was yesterday, and the next best time is today. So what are the next steps? So you can go the do-it-yourself approach and start applying the tools that we've covered today. You can utilize the template that I've provided, and you can separate your cash out into a number of different bank accounts and monitor that situation and use that. Or you can get expert help from someone like myself who uses a proven system designed specifically for providers like yourselves. As I mentioned earlier, I run a financial fitness program. And it's a program designed to help you master your finances step by step, to give you the freedom to focus on your clients and your vision, and to create a clear path for sustainable growth. And so within the program, there are online courses, there are live workshops every fortnight, and some one-on-one guidance as well as a supportive community that you can ask questions. They may have the answers because they've already experienced that situation, or you may have experienced it yourself and you can share that as well as tools and templates and personalized support included. And to find out more, you can scan the QR code and that will give you more information about the program. So really it's about, focusing on starting to build the foundation of your dream business by managing your finances effectively. And then there's some other options. I am on LinkedIn, so you can connect with me here. I regularly share insights into the finance side of things and things going on in the NDIS, as well as tips and trips as well that can help you with your business around your finances and other areas of your business and yourself generally as well. And I also have some online courses, areas like good financial habits, budgeting and cash flow management, understanding your financial reports, and business planning. And so, yes, if you scan those QR codes, you can get more information there. So that's pretty much my presentation for today. I hope you found it valuable, and I'd like to open it up to questions now. Thank you, Jonathan.
Thank you, Stephen. Very informative, and I'm sure the audience has a couple of questions there. I think one of them is, how long is the program?
Okay, so the program's an 8-week program, and but you can join it at any point in time. So because the fortnightly presentation workshops that we have, I usually present on one of the aspects within the course for about maybe say 15 minutes. And then the rest of the time is about us asking questions, sharing and solving problems.
And Julie has another question. Is there a payment plan option for joining?
Yeah, we can discuss a payment plan for doing that. Yeah.
And I think there was a comment around the QR code potentially not working or needing an account to join or something like that as well. Do you need to have an account to get access to the, I think it was the forecasting spreadsheet?
You just need to pop your details in and then you can access the spreadsheet.
Perfect. I had a question, Stephen. I think there's a couple of, large providers in the room. There's a few, smaller providers. Do you think it's best to have accounting software when kind of doing your cash flow and your forecasting and stuff like that? Or do you think that, as a small business up until a certain point, you can kind of get by with just, running everything through spreadsheets?
I think it really starts with focusing on where is it you're wanting to go with your business. There are a lot of different softwares out there. So you can start with some low-cost ones. We hear about ones like Xero and MYOB and those kind of things. But there's other ones like Rounded that if you're a solopreneur, they're easy to access and it's a fairly low cost each month to be able to utilize that. And the good thing about that particular one, if you're a sole trader, is that it also helps you to estimate your taxes as well. So you can be setting aside money for those as well. So that's one good thing about that particular software. But you can use spreadsheets, but the spreadsheet management is only as good as what your skills are around it. So, it's definitely a lot easier to utilize software to track the main parts of it. You may need to still use spreadsheets when you're trying to create particular views of things out of your accounting software or out of your client management software.
I imagine it's much more easier to get the data out of, QuickBooks or Xero and then, put it into the spreadsheet rather than trying to gather it from multiple sources, or who knows, depending on how you're doing your invoices, if you are manually creating them, for example, and then you're trying to extrapolate that into a total for a weekly forecast. I imagine that's quite difficult.
Yeah, it's quite time consuming and it can be prone to error, and especially if you're using, say, Word documents or whatever to produce invoices and they've got several lines in it, you could end up adding things up incorrectly, and then that's going to flow through and it'll have a cash impact eventually.
Do you have any good systems or practices for kind of managing the input of the data, blocking out time every single week, or, I think a lot of people, especially small business owners, are already very time poor. So, adding another spreadsheet, even though it's a very important one, can sometimes slip people's minds.
Yeah, that's it. And I think that's what it is. And that's, why I created one of my online courses, the Good Financial Habits, which is part of the financial fitness program, is pretty much around, what are the key things that you need to focus on, having checklists to follow, and doing it on a regular, consistent basis. So really, it's just about having a look at a particular time when you feel that you could focus on it and you may not be distracted by what's going on, from the client delivery side of things, and then sticking to that. I mean, things crop up and you might have to make an adjustment, but at least setting something up in your diary and saying, this is the time I'm going to focus on it, is a good way of starting.
Just not Monday morning at 9 a.m, hey?
Yeah, I don't think Monday morning, 9 a.m. is probably going to work for lots of people if they've got challenges that are flowing through from the weekend. But, some people say Friday afternoons work for them. Some people say Monday afternoon works for them because they've dealt with all the Monday morning issues. So, yeah, it just depends on your business. And I guess your business best, so you can kind of focus on somewhere.
And I think My Recovery 101 has got, can you email the spreadsheet, please? It didn't work for them. If I send you details, are you able to email that through?
Yeah, I'll email it through to you, and then you can just share it with everybody.
Perfect. Appreciate that. Yeah, if you have any more questions, feel free to come off mute, or otherwise just put them in the chat as well. Stephen, another one I was going to ask you, cash versus accruals. If you're a small business, what would you say in terms of your reporting? What would you do?
Well, I mean, I guess we need to sort of explain it anyway first. So, cash is basically is basically when you're actually receiving the cash into your bank account and when you're paying it out of your bank account. Whereas accruals is you're recognizing it when you're actually incurring it. So, like, for example, you've delivered the service and you're invoicing for it at that point in time, or you've, incurred an expense in that. So the thing with accruals is that, it's something that, as you are growing, is going to definitely be something that's more helpful to you because you can actually see what's going on. When you're smaller, cash accounting might seem it's simple to use. So you know that's happening. You can always go, okay, well, I know I've got this invoice outstanding, etc. Or I've got this to pay, and you can do it. But as you get bigger, recognizing them using the accrual method, becomes a method that then you should be using so that you get a much better, clearer idea of where you are at this particular point in time. So when you're cutting off at the end of the month, you might be accruing for things that are outstanding, and particularly at the end of a financial year as well. You need to do that.
Perfect. Thanks, mate. Is there any more questions or anything else anyone would like to share? And Stephen, I was just going to ask, are you able to email through the slides as well, and I can make them available as well as the recording?
Yeah, sure.
Perfect. All right, guys. Well, thanks everyone for jumping in. Thank you, Jono, and hope you guys got a lot of value out of that. And thanks to Stephen for taking time out of your Monday to come present, mate. Much appreciated.
Yeah, and thank you for the opportunity, Jonathan, to be able to present this to you and your community.
Perfect. Alrighty. I hope everyone has a good day, and thanks again. Cheers.
Thank you. That's really good.
Thanks, Julie. Thanks for
Okay,
stopping.
no worries.